Hello and welcome to Crypto Weeklies. In this video, we will be discussing VeChain, conduct machine learning based price forecast, also regression analysis and accumulation strategies, as well as estimated bull run peak for VeChain and its token Wheat. None of the content is financial advice. Let's get started. Today, VeChain has rallied by about 21% over the last 24 hours, price above 6 cents. Over the last 7 days, rallying more than 50%. Market cap slightly under $5 billion, volume 1.25 billion dollars, almost uh, 20 25% of the market cap is traded actively over the last 24 hours. In terms of the tokenomics for VeChain, this particular crypto does have a max supply of about 86 billion, out of which 81 billion is in circulation. So more than 90% of the maximum supply is in circulation, and that bodes really well for any future price growth getting reflected back in market cap. So this is the analysis so this is the price action of VeChain and its token Wheat. And if you toggle this with market cap view, we could see that most of the growth in market cap is getting reflected back in price growth. So as and when, if the market cap starts growing, uh, that market cap growth should more or less get reflected back in price growth. So that is one key consideration. And also on the channel we have made several videos related to VeChain. This is not the first video. You can check them out, that we were making consistently videos related to VeChain on the channel. This is the YouTube channel. One over 10 months ago, 7 months ago, you can see over a year ago, again more than a year ago, 9 months ago. You get the idea. So we have been covering VeChain for a lot of time on the channel. So if you like to see the machine, and we have been covering in terms of the machine learning based price forecast, as well as some of the regression based analysis for a while now. So if you are interested in knowing these and staying updated on the channel, please subscribe. Also give this video a like to stay updated. Right now the price of VeChain again has grown from this 2 cent level all the way to about 6 cent level. That means almost 3x over the last 1 month or so. And that puts VeChain, again not too long ago, during end of October or so, price was at around $2, 2.2 cents. Right now it's coming in at around, at one point it was as high as about 7 cents. So in terms of the Fibonacci levels, this is the Fibonacci level, also the bull market support band related analysis. The key levels in terms of price from its drawdown of its previous all-time high at around 27 cents. The first key level to watch is the 7.5 cents level, representing 0.23 fib. The 0.38 fib is coming in at around 11.3 cents, and 0.5 fib is coming in at around 14.36 cents. And the last key level to watch is the 0.618 coming in at around 17.5 cent. So those are the key levels to watch. And if this particular crypto has a new all-time high in store, the three levels to watch are the conservative level at around 1.61 at fib level, pointing to a all-time high at that point at around 43 cents. 2.618 a moderate target at around 69 cents, and 3.618 fib level at pointing a new all-time high at around 95 cents. So these are the technical analysis for VeChain. And you can see that even on its Bitcoin pair, this is Bitcoin VeChain divided by Bitcoin. There has been a significant pump, especially towards the end of November. This particular crypto did make a series of new lows and new lows on lower lows on Bitcoin pair as late as about October 2024. Since October, the trend has changed, but what needs to be seen is if this crypto can rally from here on its BTC pair more than 80%, 70% on its Bitcoin pair, to see if there is break of this structure, where the structure is series of lower lows and lower highs. gets broken by this structure where the if where and when and if price rallies in terms of Bitcoin pair more than 70%. So we'll keep updated on this chart as well. Now going back to the machine learning based price forecast, this is weekly price of VeChain, and using this price, this model is trained on algorithms such as ARIMA, XGBoost, and LSTM. The forecast output is the weekly price action at several standard deviations. This is the first one standard deviation approach, which is a which represents a non-euphoria bull case for VeChain and its token Wheat. In that environment, the forecast per the model is between 7.5 cents to about 18 cents, and that key level represent the 18 cents represents about the rally to 618 fib level, so kind of confluent. That is, if the bull market were to continue, the 0.61 at fib level, as well as the machine learning based price forecast between now and middle of May of 2025 point to about a 18 cents VeChain and its token Wheat. In case the euphoria takes over, the 2 standard deviation bull case for VeChain is coming in at around 8.5 cents, between 8.5 cents and about 45 cents, and a 45 cent VeChain would look very close to its 1.61 at fib level, again confluence between the Fibonacci levels as well as the machine learning based price forecast. And if there is a pullback, the floor at one standard deviation is between 3.2 cents and about 5 and 7.75 cents. And week by week valuations are also available on this chart. At the bottom in a tabular format, this orange line is this bull case at 95% confidence level, yellow line was at around 68% confidence levels, base case is this, the pink line is the base case, and one standard deviation bear case is this green line. So you can check them out at week by week level. We tend to forecast 6 months into the future of what the prices could do. The regression based analysis for VeChain, this is the weekly candles for VeChain. You can see over here, quite similar to these candles. And what we have done is we have coded a polynomial regression algorithm or polynomial regression model on top of these weekly candles to identify the bull zones and the bear zone in both the bullish phases of the market and the bearish phases of the market. That's why this polynomial regression function has a non-linear output, where in the phases of the bearish phases of the market, the regression function goes down with time. In the bullish phases, it goes up with time, but still identifies the overvaluation and undervaluation zones in both the bull cases and bull phases and the bear phase. Right now, as we are in the bullish phase, especially since March 2024, or you could argue since October 2023, the fair value for VeChain per the model is coming in at around 7.25 cents, and this represents about one and a half cent undervaluation from the fair value. If the prices were to again in the bull market, you can see that the valuation does not stop at the fair value but exceeds at least two. This is one standard deviation, which is kind of the midpoint of the difference between the fair value and the eventual peak. That is one conservative way to estimate what the prices could do in a continuation of a bull trend. That represents about a 12.5 cent VeChain at this point in time. The 2 standard deviation, which tries to address major tops, at least historically speaking, at around 95 percentile confidence level, that at this point that points to at a price level of about 21.7 cents 70 cents, 21.70 cents for VeChain, and it represents about in terms of the current price, between the difference between the current price and the 2 standard deviation ceiling is about 3.5x from the current price of about 6 cents. And these functions, again, they get updated every day as we get more and more information about the price action. And you can see that what was a 2 standard deviation ceiling back in March 2024 was at around 5 cents, and as the crypto hit this 2 standard deviation ceiling, there was a major sell off. But now the 2 standard deviation ceiling has grown by about a 4x. That is because as we go further into the bull market, unless there is a major topping out scenario by which the tokens start hitting their 2 standard deviation ceilings, and if the trend continues, the likelihood of this shape of the regression function in the future is again in an upswing. Again, might not be as steep of an upswing, but still again you can see that the upswing from if you compare the current upswing with the 2019 upswing, it lasted from 2019 June till about March 2021. One could argue till about June 2021. So almost 2 years into the future. So that's one way to interpret the current price action. In terms of accumulation strategies, we have 3 models: the SMA model, the time weighted average model, and the DCA model. DCA model takes a lot of cue from the regression approach. Instead of at a weekly level, DCA model looks at the regression function at a daily level, the same kind of regression function, and based on the difference between the price and the fair value regression function, and again we have adjusted it for diminishing returns as well as increased volatility. So in terms of those differences, we have assigned the color codes, the risk levels between 0 and 1, and these risk levels are normalized at around in the range, for example, between 0 and 0.1 risk, 0.1 to 0.2 risk. So kind of normalized in those levels, and this particular model helps identify 2 things. First is if the market is too overheated. So for example, if the hypothesis is anytime the risk levels are greater than, let's say, 50%, we don't either we consider that as a topping levels for VeChain. So for price action where the risk levels are greater than 60%, between 60 and 100%, so that identifies when to again either halt or halt DCA or DCA out of the market, per at least historically speaking. And the opposite is of this is identifying when to DCA heavily into the market based on when the risk levels are less than 10%. So for example, if the hypothesis is again it does a better job in identifying the bottoms. Right now, as late as again over here December to as late as yesterday, the risk levels were between essentially less than 10%. Right now the latest print on the risk levels is at around 12%. That means about 88% reward. In terms of some of the conservative estimate of VeChain's price in the near future, between 11 cents and 21 cents, if the risk levels were again key risk levels, if the price were to go to a risk level of about 0.5, then price at around 11 cents, another key risk level at around 0.7 at around 15 cents, 0.8 at around 17 cents, and you get the idea after 17 cents. And this is at this point in time, so it's not forecasting too much into the future. The regression line right now looks like this, but in future it could change its shape depending on the nature of bull market we get. The second model for VeChain is coming, this SMA model, which is instead of looking at the price and regression function, which looks at how the price is operating with respect to the 20-week moving average. If it has moved a lot away from the 20-week moving average, this model again helps us determine a topping signal. So again, same hypothesis, risks higher than 60% helps identify these peaks where the price has gone too far away from the simple moving average, and also identifying the bottom if the price has moved too far away from the 20-week simple moving average to the downside. Again, this particular model does identify some of the lowest point after a major rally, so rapid sell off after a major rally. So those kind of levels are also available. In terms of the current risk levels identified by the model, again this model identifies about a 42% risk at this point in time. And with this, the third model will go, and we have a composite analysis of all the 3 models as well, that is the estimated bull run peak. The time weighted average price based model, this looks at how much time VeChain has spent at some of the key price levels. And again this particular analysis is helps identify the with the help of this blue line, if the price has gone too far away from the time weighted average price or is trading below the time weighted average price, which represents a great buy zone especially in the bear market, as well as some of the times before the parabolic bull run moves. So for example, in May 2020, accumulation phase from almost 28 into 2020, and again from May 2022 till if you ignore a few days over here in March to April, from May 2022 till as late as about November 2024. So in a way, you can interpret that as price trading below and the realized price. So in this for this analysis, the time weighted average price is at around 3.3 cents. The price is currently 2x above this price, time weighted average price, representing about a 50% risk at this point in time. And if as a summary of our estimation of all the models, we have an estimated bull case regression risk 11%, time weighted average price risk 44%, 45%, SME risk at around 38%, weighted risk at 26%. Estimated bull run peak based on just risk reward analysis is at around 23 cents, and that represents a reward of about 4x from the current price of 6 cents. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you tomorrow. Thank you and have a nice day. Bye bye.